nights just like this. So let's get down to business. Mama, please don't walk out. I'm about to let my heart speak. Friends keep telling me to leave. So let's get down to business. Let's get down to business.
Let's get down to business. Who likes the new intro, guys? What's up, people? Welcome back to another stream. Holy smoke, 74 people watching in 1 minute. 76, 79. Holy shit. 82 people. Holy shit, guys. 85. My God. 1 minute, 56 people watching. Crazy, bro. Just drop a like. Crypto goes out. Drop a like, and let's watch Papa Powell, what he's saying on the market. So let's see what Mr. Papa Powell is saying on the market. Let's see. Let's see what he has to say. Let me stream him, and then yeah. Okay. So here he is.
With today's decision, we were in a position to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. We continue to face two-sided risks. In the committee's discussions at this meeting, there were strongly differing views on how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it. Policy is not on a preset course. At today's meeting, the committee also decided to conclude the reduction of our aggregate security holdings to 1. Our long-stated plan to stop balance sheet runoff when reserves are somewhat level we judge consistent with ample reserve conditions. Signs have clearly emerged that we have reached that standard. Over the 3.5 years that we've been shrinking our balance sheet, our securities holdings have declined by $2.2 trillion. As a share of nominal GDP, our balance sheet has fallen from 35% to about 21%. In December, we'll enter the next phase of our normalization plans by holding the size of our balance sheet steady for a time, while reserve balances continue to move gradually lower as other non-reserve liabilities, such as currency, keep growing. We will continue to allow agency securities to run off our balance sheet, and will reinvest the proceeds from those securities in treasury bills, furthering progress toward a portfolio consisting primarily of treasury securities. This reinvestment strategy will also help move the weighted average
Drop a like, guys, and report the stream would be great. Fucking crazy. Bitcoin is dumping like shit, bro. Holy shit. Fucking hell.
Conclusion at your next meeting?
Well, as I just mentioned, a further reduction in the policy rate at the December meeting is not a foregone conclusion, as I've just said. So I would say that needs to be taken on board. We had, just say this, 19 participants on the committee. Everyone works very hard at this and takes their obligations to serve the American people very seriously. And at a time when we have tension between our two goals, we have, strong views across the committee. And as I mentioned,
fucking hell, 110K, bro. But fucking Papa Powell always up the market every fucking time. Motherfucker, look at 110. Holy shit. 109. Woo! Bro. $109.5. Holy shit, bro. Holy shit, bro.
we saw downward revisions in job creation, we saw a very different picture of the labor market and suggested that there were higher downside risks to the labor market than we had thought. And that suggested that policy, which we had been holding at a I would say modestly, others people would say moderately restrictive level, needed to move direction over time of neutral. If the two goals are sort of equally at risk, then you ought to be at neutral, because one of them's calling for you to hike and one of them's calling for you to cut. So if that got back into balance, then you'd want to be roughly at neutral. So in that sense, it was a risk management. And I would say the same about today, sort of the same logic. But as I mentioned, going forward is a different thing.
Claire.
Whatever this guy says.
Claire Jones, Financial Times. Thank you for taking this question.
Crazy, bro.
We've
Crazy fucking hell. Look at this. It's dumping lower and lower. Very easy, bro. 109,200 is went down. Two 180 people watching. Oh, fucking hell. Crazy, bro.
Views, and they were reflected in strongly differing views in today's meeting, as I pointed out in my remarks. And that's what leads me to say that, that we haven't made a decision about December. I always say that it's a fact that we don't make decisions in advance, but I'm saying something in addition here, is that it's not to be seen as a foregone conclusion. In fact, far from it.
Can I just ask a quick follow-up on QT? How much of the fund impressions we've seen in money markets are related to the US Treasury issuing more short-term debt?
That could be one of the factors, but the reality is we've seen, the things that we've seen, higher repo rates and federal funds rate moving up. These are the very things that we look for. We actually have a framework for looking at, the place where market conditions. Really, in the last, call it 3 weeks or so, you've seen more significant tightening, and I think a clear assessment that we're at that place. The other thing is, the balance sheet is shrinking at a very, very slow pace now. We've reduced it by half twice, and so there's not a lot of benefit to be holding on to get the last few dollars, because again, with the balance sheets, the reserves are going to continue to shrink as non-reserves grow. So, there was support on the committee as we thought about it to go ahead with this and announce effective December 1 that we will be, freezing the size of the balance sheet. And the December 1 date gives the markets a little bit of time to adapt.
Colby. Thank you, Colby Smith with the New York Times. So much of the rationale for cutting interest rates, even as inflation moves away from the 2% target, seems to be, that there are these mounting downside risks to the labor market. But if those don't materialize and the labor market either stabilizes around current employment levels or even starts to strengthen somewhat, how would that change your perception of how much interest rates need to fall from here? Would you then be a bit more concerned about underlying inflation and the possibility of second round effects from tariffs?
Yeah, and I mean, in principle, if you were to see data that suggested that the labor market's strengthening or even that it's stabilizing, that would certainly play into our decisions going forward. So, we do have, we get some data. The labor market is a place where we get, for example, we get the state level data on initial claims, which are sending a sort of a signal of more of the same. We also get job openings. And we'll get lots of survey data. We'll get the beige book and things like that. So we'll have a picture of what's going on in the labor market. And the fact that we're not seeing an uptick in claims or a downtick really opening suggests that seeing maybe continue. We'll have a picture of what's going on. We also will have the beige book again. I would say we're not going to be able to have the detailed feel of things. But I think if there were significant or material change in the economy one way or another, I think we'd pick that up through this. So in terms of how it might affect December, it's really hard to say.
Guys, drop a like on the stream on X and repost if you're watching from there. We have 353 people watching. Fucking crazy. 389 people.
Mr. Chairman, can you characterize the meeting in terms of, you said strongly differing views? Was this a close call, this cut, or was it a close call maybe the other way because you had dissents on both sides? Thanks.
So I was referring to the discussion about, to the extent it related to December. You saw we had two dissents, one for 50 and one for no cut. So, that was a strong, solid vote in favor of this cut. The strongly differing views were really about the future. What does that look like? And I think people are saying, they're noticing stronger economic activity. Forecasters generally, broadly, have raised their economic growth forecasts for this year and next year, in some cases quite materially. In the meantime, we see, a labor market that's kind of not clearly in motion. It's not clearly declining quickly in any case. It may be just continuing to gradually cool. And again, people have different forecasts and expectations about the economy and different risk tolerances. And so there's you read the SEP, you read the speeches, there are differing views on the committee, and to the point where I said what I said.
And just to follow up on the balance sheet, if you stop at the runoff now, does that mean you have to go back to actually adding assets sometime next year so that the balance sheet doesn't shrink as a percent of GDP and become a tightening factor?
So you're right. The place we'll be on December 1 is that the size of the balance sheet is frozen. And as mortgage-backed securities mature, we'll reinvest those in treasury bills, which will foster both a more treasury balance sheet and also a shorter duration. So that's what, in the meantime, if you freeze the size of the balance sheet, the non-reserve liabilities, let's see, for example, they're going to continue to grow organically. And because the size of the balance sheet is frozen, you have further shrinkage in reserves. And reserves is the thing that we're managing that has to be ample. So that'll happen for a time, but not a tremendously long time. We don't know exactly how long, but at a certain point, you'll want to start reserves to start gradually growing to keep up with, the size of the banking system and the size of the economy. So we'll be adding reserves at a certain point, and that's the last point. Even then, we didn't make decisions about this today, but we did talk today about the composition of the balance sheet, and there's a desire that the balance sheet be right now it's got a lot more duration than the outstanding universe of Treasury securities, and we want to move to a place where we're closer to that duration. That'll take some time. We haven't made a decision about the ultimate endpoint, but we all agree that we want to move more in the direction of a balance sheet that more closely reflects the outstanding treasuries, and that means a shorter duration balance sheet. Now, this is something that's going to take a long time and move very, very gradually. I don't think you'll notice it in market conditions, but that's that direction of things.
John,
how are officials interpreting the latest CPI report? So some components came in lower than expected, but for inflation was 6%. So at the moment, what are you learning about the drivers? And also, do the risks are greater that the Fed makes a mistake on employment or inflation?
CPI report didn't get PPI after that, which is important for translation into what we look at, which is PCE inflation, but we can still make a pretty good assessment of what that will be. Well, there might be some adjustments, but so directionally, it was a little softer than expected, and we always break it down into the three components. So basically, you've seen goods prices increasing, and that's really due to tariffs. And that's compared to a longer run trend of very, very mild deflation in goods. So that's moving inflation up. On the other side of that, good news that housing services inflation has been coming down as expected. And that's kind of been moving sideways over the last few months, but a significant part of that is non-market services, and we don't take a lot of signal about the tightness of the economy from that. So if you add all that up, a couple things to say. One is that inflation away from tariffs is actually not so far from our 2% goal. We estimate, people have different estimates of what that is, but it might be, 5 or 6 tenths, and so that if it's 2.8, then core PCE, not including tariffs, might be 2.3 or 2.4 in that range, something like that. So that's not so far from your goal. Look at that. The thing about inflation is the base case is it will come. It will increase. And we've been very focused for all of this year at making sure that that's the case, and thinking carefully about what are the pathways through which it could become something else, troublesome inflation. One of those would be, a really tight labor market. We don't see that. Another could be inflation expectations moving. We don't see that. So I think we're watching this very carefully. I think it's not the case that we're just assuming that it's going to be one-time inflation. We understand fully this is a risk we have to monitor and ultimately manage.
With the stubborn in services inflation, what are some of the things that the Fed could do to address that, and especially when we're seeing potentially labor supply challenges?
Sorry, say the first.
The stubborn services inflation that you mentioned.
Services inflation. Yeah. Well, again, the part of services inflation that isn't coming down as we would like it to is the non-market part of non-housing services. And, you know, overall, that's just something that
Fucking suckers dumped it to 109K and pumped it back $2,000. So it's like leverage traders such as exchanges liquidating all the retail. Fucking hell. Fucking insane.
I want to say, though, we're absolutely committed to returning inflation to 2%. If you look at longer-term surveys or market pricing, you will see that's a credible commitment, and there should be no question that that's where we're going.
Chris.
Great, thank you. Chris Rugaber at Associated Press. So there's a big investment boom in AI infrastructure right now, as you know, and wondering if the existence of such a boom would indicate that rates are not that restrictive after all, and could further rate cuts at this point perhaps fuel an excess level of investment there or market bubbles? How is the Fed thinking about that?
So I don't think that you're right. There are a lot of data centers being built and other investments being made around the country and around the world. Big U.S. companies are just investing a lot of resources in thinking about how AI, which will be based on those data centers, run through those data centers, is going to affect their businesses. So it's a big deal. I don't think that the spending that happens to build data centers all over the country is especially interest sensitive. It's based on longer run assessments that this is an area where there's going to be a lot of investment and that's going to drive higher productivity and that sorts of things. I don't know how those investments will work out, but I don't think they're particularly interest sensitive compared to some of the other sectors.
And then just a quick follow-up. You mentioned that you do have data that you're looking at for inflation and growth in the absence of government data. Could you give us a sense? I think we know a lot about the jobs data that's out there. Can you give us a sense of what you're looking at?
Government data, but you know all of these. I'll just mention some of the many names. Price Stats, Adobe, and for wage inflation, there's ADP data. On spending, you're going to ask about at some point. There are lots of other things that we look at, but it's many different sources, and again, including what we get out of the Beige Book, which will be sort of come out mid-cycle as always. And it doesn't replace the government data, but it gives us a picture. Again, I think if something material were happening, if there were material developments, I think we would pick that up. I don't think we'll be able to have the very granular understanding of the economy while this data is not available.
Howard.
Howard Schneider with Reuters. Thank you. I just wanted you to elaborate a little bit on what you said a moment ago about the continued shutdown, making private data that isn't the gold standard, that you're relying on your own surveys of the Beige Book. Do you worry at some point you have to start making policy by anecdote?
Just temporary state affairs. We're going to do our jobs. We're going to collect every scrap of data we can find, evaluate it, and think carefully about it. And that's our jobs. You asked, could it affect the it may come back. There's a possibility that it would make sense to be more cautious about moving. I'm not committing to that. I'm just saying it's certainly a possibility that you would say we really can't see, so let's slow down.
As a
Always
follow-up
gonna
in
fucking
the
slow
debate in
down.
this
Fuck
meeting,
the market.
we saw recently some pretty big layoff announcements coming from Amazon and others. Wondering if that figured into the discussion at all, that you're starting to see the be resolved, to the detriment of employment. And secondly, some of the stress is starting to appear in the bottom spur of the K, as they call it, household health premium.
Shitcoin pumping.
Of companies either announcing that they are not going to be doing much hiring or actually doing layoffs. And much of the time they're talking about
Let's go to the next one.
don't really see it in the initial claims data yet. Now, it's not a surprise that we don't. It takes some time for it to get in there, but we're watching that really carefully. But again, don't see it yet in the initial claims data. On the K-shaped economy thing, I would say the same thing or similar thing. We are, if you listen to the earnings calls or the reports of big public consumer-facing companies, many of them are saying that there's a bifurcated economy there, and that consumers at the lower end are struggling and buying less and shifting to lower cost products, but that at the top, people are spending at the higher income and wealth, and so much anecdotal data on that, and so we think there's something there.
Edward.
Thank you, Edward Lawrence with Fox Business. So, Mr. Chairman, I want to take another crack at the further reduction in rates. Is not a foregone conclusion. So in December, he said, far from it. So if a cut might not be on the table for December because of lack of data.
Drop a like and retweet the stream, guys. We have 500 people watching, almost 457 on X. Crazy, bro.
Of many estimates of the neutral rate live in that 3 to 4% area. You're there now. You're above the median number for the committee, but I think there are people on the committee who have higher estimates of the neutral rate, and that you can argue these positions since it can't be directly observed, the neutral rate. So, I think for some part of the committee, it's time to maybe take a step back and see whether there really are downside risks to the labor market, or see whether, in fact, the growth that we're seeing is real. Narrowly, the labor market is a better indicator of the momentum of the economy than the spending data. That's the lore. In this case, that gives a more downbeat read. So people just have, again, we've cut 50 more basis points in the last two meetings, and there was a sense like, let's pause here, kind of thing, and a sense from others wanting to go ahead. But that's why I say differing views, strongly differing views.
So on that division, then you're talking about going forward. So what's more important in this division? Is it inflation risks? Is it employment risk? Or is there a deeper philosophy division among the board?
Look, everybody on the committee is deeply committed to doing the right thing to achieve our goals, maximum employment and stable prices. You have differences on how to do that. And as I mentioned, some of that is different forecasts, but a lot of it is also different risk aversions to the different variables, which is common through all Federal Reserves. People just have different risk tolerances, let's say. So that leads you to people with disparate views. You will know that from the speeches.
Shitcoin is sending, man. Disco and Trash are coming next one to pump.
It's and again, you've seen it in the September Summer of Economic Projections. You've seen this in the public remarks of FOMC participants, and now I'm telling you that's what you can expect that in the minutes, and I'm just telling you that's what happened in the meeting.
Elizabeth. Thank you so much. Elizabeth Schulze with ABC News. What is your explanation for why the job market is weakening right now, and what will this rate cut do to improve the job market?
So I think there are two things affecting the job market, and one of them is just a dramatic reduction in the supply of new workers. And that's two things. That's declining labor force participation, which is a cyclical thing. And then there's declining immigration, which is just a big policy change that actually began in the last administration and it has been accelerated now. So a big part of the whole story is that supply side story. Okay. In addition, labor demand has declined, and the unemployment rate has gone down, meaning that demand for workers has gone down a little more than supply. So that's what's going on, but it is mostly a supply function. It's mostly a function of the change in supply, I think, and many people think. So the question then is, what does the our tool do, which supports demand? And and I would just say, when you're in a situation where job creation, if you adjust for likely overcounting in the way to react by supporting demand with our rates, and we've done that. We've reduced rates are looser. I wouldn't say that they're accommodative right now, but they're meaningfully less tight than they were, and that should help so that at least the labor market doesn't get worse. Though it's a complicated situation, and some people argue that this is supply. And
Shitcoin buys are coming in, $2,300. Shitcoin is pumping. Trash coins buys are coming in. Disco next one to move.
if you put tariffs in effect, and they've been coming into effect consistently in February, March, April, May, and that's all happening. So that'll continue to happen for some time, probably into the spring. These are not big increases, though. These are a tenth or so on inflation. They may be big increases on a particular product that's been tariffed, but overall, these are fairly modest. I think some projections go, we're at 2.8% inflation. You might get 2 or 3 more tenths or 4 more tenths maybe. But then as all of the tariffs are in, they stop generating inflation. You've had a one-time price increase. As long as you're not, at least this is the theory, this is how we believe and hope that it will work out. Once the last tariff is put on something, at that point, it becomes higher price.
Shitcoin rocketing, man, like a fucking shit. $2,000 buy, $570 buy. Shitcoin next one to fucking rocket and disco. Guys, load up before disco is gonna go fucking parabolic. And trash as well. 1 million market cap for Shitcoin.
we look at the overall financial system, and we ask whether it's stable, whether it could withstand shocks, right? So, banks are well capitalized, while some households are clearly under stress. In the aggregate, households are in good shape financially, relatively manageable levels of debt.
The reality that it seems more likely to be stimulating increased investment in AI, which is the rationale for thousands of job cuts that have been announced in the last few weeks.
Yeah, I don't think interest rates are an important part of the AI of the data center story. I think, people think they're great economics in building these data centers, and they're making a lot of money building them, and they think they have very high present value and all that sort of thing. It's not really about, it's not about 25 basis points here or there. We use our tools to support the labor market and to create price stability. That's what we do. That's our two jobs, right? So we're here by lowering rates at the margin, that will support demand, and that will support more hiring, and that's why we do it. Now, no 25 basis point or even 50 basis point hike is going to be a despot. About this, which is what we've been doing, because we know where inflation is, and we know that, I've told you the story. It's a complicated story, but this is the best assessment that we can make. Because there's uncertainty around inflation and the path ahead for inflation, that's why we're going. That's why the pace we're going has been a careful one.
Victoria. Hi, Victoria Guida from Politico. On AI, I'm just wondering, it seems like a lot of the economic growth that we've been seeing is fed by investments in AI. So how worried are you about what a sudden contraction in tech investment would mean for the overall economy? Is there enough strength in other sectors? And specifically, are there any lessons that you take from the 1990s in how you might approach what's happening right now?
Yeah, this is different. In the sense that the companies that are so highly valued actually have earnings and stuff like that. So if you go back to the 90s and the dot-com, these are ideas rather than companies. And, so there's a clear bubble there. Whereas I won't go into particular names, but they actually have earnings, and, it looks like they have business models and profits and that kind of thing. So it's really a different thing. It's the investment we're getting in equipment and all those things that go into creating data centers and feeding the AI. It's clearly one of the big sources of growth in the economy. Consumer spending also, though, has been, is much bigger than that.
Guys, drop a like and repost the stream. We have like 500 people watching from X. Just drop a like and repost would mean a lot. But please drop a like.
And consumers or maybe skewed that way, but the consumer is spending, and that's a big chunk of what's going on in the economy, substantially bigger than AI. You could point to growth. I mean, actually, you may be growth as opposed to level, but consumer spending is a much bigger part of the economy.
And why do you think that?
you still got the economy growing at a moderate pace.
Andrew.
Hey there, Andrew Ackerman with the with the Washington Post. I wanted to ask if you could elaborate on how you think about policy in the context of the data drought. Does it make you inclined to stick with your plans as set out in September in the absence of the data that might change your mind, or does it make you inclined to proceed with added caution because of uncertainty?
Yeah, well, we'll know when we face that question, if we face that question. It'll probably be argued both ways, right? But I've said a couple times here that, if you really aren't getting information you really don't know, and the economy looks like it's solid and stable and hasn't really changed, there will be an argument. I don't know how persuasive it will be, but there will be an argument that, you slow down when you can't see as far ahead. Others may argue, I'm not sure where this argument will come, but you're perfectly right that you could also argue, well, things haven't really changed, but you might not know that, so I don't know whether we'll face this or not. I hope we don't. I hope by the time of the December meeting, we're getting, a better flow of data, but if we're going to have to do our jobs one way or the other.
Okay. I also just wanted to ask a FinReg question. I think several years ago, you said the overall amount of capital in the system was about right. As the Fed moves forward with a revised Basel proposal, potentially changes to the GSIB surcharge, has that changed at all? Or are you planning to significantly reduce the amount of capital in the system? Thanks.
So there are discussions going on, I think, among the agencies. And I don't want to get ahead of those discussions. I continue to think that the level of capital, when I said that in 2020, was about right. And of course, there's been much capital added since then through various mechanisms. But I look forward to. I know those discussions are really just getting going. They haven't come to the point where they're got a whole plan and that kind of thing. So I really don't have much to say on that.
Brian.
Hi, Chairman Powell. Brian Chung with NBC News. Is the weakness in the jobs market accelerating, and who's at risk if the interest rate cuts are not the effective medicine for a further slowdown in the labor market?
So we do not see the weakness, as you put it, the weakness in the job market accelerating. I would say, and again, we didn't get the September employment report, payroll report, but we look at, the unemployment insurance claims, initial claims are reported at the state level, and we still get those, and we can accumulate them and get the national number. And there's really, no story. You can look at the numbers. Same thing with the job openings we get from Indeed. There's just no story over the last 4 weeks. It's kind of stable. So you don't see anything that says that the job market is, or really.
This chart sucks.
Unemployment rate.
So as you make these cuts, is it
I'm
the
just talking
lower
about
income
the
workers that you're thinking about, or those who might have their jobs automated? Is there a particular
That we're
section
thinking
of
of?
the labor market that you're particularly?
So we can't, our tools don't allow us to target any demographic or any income level, that kind of thing. I do think that people, we saw this during the global financial crisis and the long recovery. If you have a long period of very strong labor market conditions, it benefits people at the lower end the most. The last 2 or 3 years of that long expansion, people at the lower part of the income spectrum were getting the biggest benefits, and lots of things were happening in that space demographically, which were very constructive. And we're not at that place right now. But so a stronger labor market is the best thing we can do for the public. It's also part of our job. It is half of our job, but it is absolutely the best thing we can do. for people, along with keeping prices stable. Those two things. I mean, inflation also hurts people on fixed incomes more than other people.
Courtney. Hi, Chair Powell. Courtney Brown from Axios. As you know, the 12 Reserve Bank.
Okay, fuck him. It was enough for me. I don't know how about you guys, but Papa Powell, every time he goes every time he goes live and just says good afternoon, bang, market just go dump crazy. Like, it's insane every time he comes in. I don't remember last time when he came in and said good afternoon and the price basically pumped. Every time it dumps. The thing is, like, these insiders, these motherfuckers, they knew it yesterday, because BTC started to dump here. So you can see here this was, you see, we touched 116,400 here yesterday, and these guys knew here, and then they started to sell here before the meeting because they knew this news. You see, they started to sell all the way here and then sell here and then bang, liquidate, because they knew the news. It's fucking insane. He cut 25 basis points, but he could have cut more. But it's insane that he cuts interest rate 25 basis points, which is good, and the market dumps. Like, it doesn't make any sense. Like, I don't know, man. Papa Powell is crazy, bro. Fucking crazy guy. Like, Powell and Trump, like, I don't know, is the worst thing that could happen to crypto. Serious to God, it's like, the fuck, man. Like, absolutely insane. Okay, let me get to your questions, guys, and I will answer a few questions and then wrap up the stream. Yeah, Papa Powell was annoying once again. Guys, shitcoin is flying like crazy. Look at this shitcoin. Today it pumped like crazy, 47% up, bro. Like, gone rocket science. Next one to pump is Disco and Trashcoin. These two is Disco. Trash is pumping as well. I think last chance to buy Disco as well. Disco is going sideways now for 7 days, for 1 week. So bottom is in. The bottom is in, and when this takes off, bro, is gonna fly like crazy, bro. Crazy. Okay. Good evening, crypto gold. Shitcoin is going parabolic and viral is exploding like crazy. New all-time high is on the horizon. Yes, my friend, it's really rocketing like there is no tomorrow, man. I'm telling you, next one, Disco and Trash is gonna send. As I said, like, these coins are amazing coins, and they're gonna go crazy. So shitcoin is pumping. Yes, shitcoin is going fucking parabolic. Here we go, Mr. Crypto, Bill's boss standing himself, and let's go. Shitcoin is going. Intro is fire. Do you like the intro? Let's get down to business. I fucking love it too, man. Let's get down to business. Shitcoin is going fucking insane. Wake up before it goes to 1 billion market cap. Yeah, man. Amazing. Drop a like, guys, on the stream. We have 37 people on YouTube today, 537 people on X watching. People are watching the because of the thingy from the FOMC meeting, but it's crazy, bro. Like, today I had like a record viewership because of this FOMC. Crazy, bro. Disco, Shitcoin, and Trash are going to skyrocket soon. Absolutely. BTC falling. Yeah, it's totally fucked up chart, man. This is very annoying, man. I hate fucking Papa Powell, man. Like, really sucks. Look at this. Look at this, man. Like, every time this sucker speaks, every time the market dumps. Every fucking time is the same thing. What are your exponential profits from Trouble? I don't know. I think it can go to, like, I don't know, 50, 80, 100 million market cap. Trouble is amazing coin. Let me pull it up. Trouble swap. I have a big bag of this one. We need to wait for the market to go up, because you can see that fucking Papa Powell is dumping the market all the time. But actually Trouble has pumped. Look at this. It pumped today. actually very well. It went from 13 cents to 20 cents. Now it's at 17 cents. So it's actually recovering from this. You know, had a huge pump and then dumped, and now is recovering. It's coming back. So treble is the best, like how to say, like the most like useful, you know, one of the most useful coins, because it's a DEX and they have perpetual contracts, so you can trade BTC and ETH and everything on 60x leverage. I don't recommend anyone to do leverage trading, but they have that as well. You can do cross-chain swaps as well. You can swap from ETH to Solana, Solana to ETH, Solana to BNB, anything, you know. So the utility for this DEX is crazy. It's amazing. It's working. I use it, you know, like use the DEX always for cross-chain swaps and everything. So it's just a great project. And I find it totally nonsense that this is a V4 DEX on base and only V4 DEX on base, and this 2 million market cap, bro. It's absolutely crazy, bro. How can be something like this a fucking, you know, 2 million market cap? So yeah. Fire Papa Powell. Hey, I would vote for that one as well. Hello, buddy. Shitcoin has done 2x in 30 minutes. It's just insane. Pumped 1 billion market cap in 30 minutes. Yeah, it's going crazy, man. Shitcoin is just sending like there is no tomorrow. I told you guys. I'm telling you now again. This is gonna happen. The same story. This has bottomed out. This has gone sideways now for a week now. Look at this. This has gone now sideways for a week. It's just gonna go and gonna pump again. Like how this did this parabolic pump. It goes sideways now, holding the floor, is holding above this range. You see, it's just going sideways for a week, and you're gonna. As soon as market stabilize, if you know Papa Powell and fight against the it's gonna take more time to stabilize, but you know, it will move. Sure. So it's a crazy buy on this coin. Also, trash coin is a good pullback. Anything above like 3 million market cap, you know, trash coin is a gift, absolute gift. He's always playing politics when in fact said that he will cut in if the labor market is weak. And now we are here. The labor market is weak. He's not cutting aggressive. He's motherfucker, man. Motherfucker. Does anyone have any news he's gonna be fired? I hope so. It will be great. Goes back at it, thinks looking up. Yeah, man. All the members of the Fed agree to 50 basis point. He's stuck with the 25. Yeah, motherfucker. Guys, we have 54 people watching on YouTube and 543 people on X. Like, holy shit, guys! Drop a like on the stream. If you're watching from YouTube, then watch a like on YouTube. Drop a like, please. If you watch on YouTube, drop a like on YouTube. If you watch from X, drop a like on X. 590, 600 people. Holy shit, bro! 600 people watching. Holy fucking smoke, man! Crazy, bro. Crazy, bro. New record. If you're watching, guys, from X, drop a like and repost the stream here. And if you're watching from YouTube, then just drop a like on YouTube would be amazing. Yeah, man. Everyone waits for Papa Powell to fucking go to hell. Powell and Trump have been the cancer to crypto market. They get rich and we get screwed. Absolutely. Fucking annoying. I really hope November gonna be the one, you know. Yeah, I told you, Shitcoin 500-600K was the bottom. 500-600K market cap here. I said, you know, it had this downtrend. But it pumped like I don't know if some other YouTuber called it today. Probably yes, because it pumped like crazy. But whoever bought this yesterday, this 5K buy, is probably a YouTuber, in my opinion. I don't know who, but we will see in the next few days who called it, who's gonna start talk about it, you know. But yeah, it made a fucking crazy pump, bro. Crazy pump. Join the Patreon, guys, as well if you want to get into the best VIP group in crypto right now. I think truly is, and I'm not saying this to show off, but I truly think is the best group right now. We have like 138 people in a VIP. Like it's just amazing people. This is a true. If you look for like a true normal VIP group, there is no pump and dumps and like all these things. This is the best group for you because I push 3 coins and push them long term. I don't do 1,000 buy lets. So I do few. 2-3 a month when market allows me. I haven't done now for a few weeks, none because the market sucks. But as soon as the market recovers, I will do a new buy let and everything. And trust me, it will fly because I talk about this project long term. I do a research, and if I project I like, I talk about them long term. So it's truly the best, Patreon group because I don't do paid videos as well. I don't do paid marketing. I don't do any of those shit. So it's just like if you look for like a true normal thing, like with what you can't find with 99.9% of YouTubers because all of them doing paid videos every day. And they drop 3 to 5 videos a day and they tell you, this coin, that coin, every coin gonna do 100x. And then just doesn't make any sense. So if you really truly want like a normal Patreon group, join this one, and trust me, you will not get left behind. Shitcoin, I called it 100k market cap in my VIP. Now is up 9.4x, and we were up 38x at the all-time high because it ran from, this was my call from the Patreon group here, from 90k market cap here, it went all the way up to fucking $3.8 million. So 38x it did like in 10 days. Look at this, from 24th of September till the 5th of October. So count, how much is that? Like 12 days, pretty much. It pumped 38x in 12 days. Disco, I call this thing at 90k market cap in my VIP, which is here. I called a Disco at 90k market cap in my Patreon group. This thing went all the way up to 3.39, so did a 33x from 5th of October until 15th of October. So in 10 days, this thing Disco did 33x in 10 days. I don't know if you have that in any other Patreon group. I don't think so. So join mine, and I'm telling you, if you want to look for legit thing, then this is the place to be. Also, we did like 15x on Trash Coin and like crazy. Okay, let me pick some comments. Tomorrow is a very big day for crypto. Trump and China president meeting, and it will decide if we have a trade or not. They're gonna probably have a solution. They wouldn't meet to have a beef. You know what I mean? So yeah, I think it will. They will obviously. They obviously have a solution for all the shit show that they have done so far. So yeah, I think it will be fine. Ahmed said, "Pick your microphone." I'm traveling, so I'm not at home. So my internet is extremely weak. So that there's nothing I can do here. Tomorrow I'm going back home, so I will be back at normal internet and everything. So it's shit right now. So there's nothing I can do with to fix any sound. So it is what it is right now. I love Shitcoin will go parabolic. Absolute Shitcoin is going crazy already, man. 940k market cap. It pumped like rocket today. I love Trash. Yeah, Trash is a fucking true gem. Greetings, bro. What's up? When we need a pump for Disco, let it give us the dance. Yeah, but Disco is gonna fly. There is already some guys coming in, so Disco is gonna go crazy. I think he's gonna overtake Landwolf and Andy. So, and they are 250. They went to 250 and 350 million market cap in the previous bull run, and they have all bundled wallets and everything. So this is gonna be the third biggest Mad Fury coin, Disco, after Pepe, Brett, and this is gonna be the third biggest one. You will see. Hi CG, I jumped in on Trash on Maxi with $500 at 0024. I hope it pumps. Lol, I wanna scalp it. Still have Trash on Phantom for long hold. I need to pay bills. No worries, my friend. Are you sure Powell tenure ending in May next year will help the market going forward? The greedy fool in the White House in the major problem. Yeah, Trump is the biggest problem here. But also at the same time, I don't really understand how basically Trump cannot fire Jerome Powell. I just don't get it, man. Bro, you are the president, bro. You can do whatever the fuck you want. If you want to fire someone, you just say Papa Maria, my friend, and see you next life, and that's it. Like, I don't know how, what is the law in US and how is work. I know in my country, if the president says you fuck off, you fuck off. Like, I don't know how it works in US, but it's just crazy. I'm billing on the tree. My biggest holding is trash. If it does 50x minimum, I'll be a pig in shit. Really enjoy the channel. No bullshit. Truths. 4K disco, 4K trash, 4K shitcoin. Amazing, my friend. This will retire me. Looking forward to our journey. Crypto goes. You are welcome, my friend. And yeah, you will see it's gonna go crazy. Hello, bro. What is a prediction on shitcoin peak in the market cap? Few hundred million market cap. So I think this is very, 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 very early. This is nothing. This is nothing what is going to come. Also, trash coin I think is the next fart coin. I think this is going to go to 500 to I don't know, many hundreds of millions of market cap. This is nothing here. A lot of YouTubers. I can tell you now that about 10 YouTubers are going to talk about trash coin. I tell you now in advance because it happened before and it's going to happen again. As soon as the market recovers, I will pump it alone to like 10-15 million market cap, and then all the Moonboy YouTubers are going to come in again and wow, this trash coin is actually a good coin, but they're not going to talk about it because they're good, because they're Moonboys, and anyone that may going to make a video on trash coin gonna get good views, so they are doing community farming. Don't forget a few things that who is talking about these coins now and who's going to talk about them later. So are the other YouTubers talk about it now, or they're going to talk about it when it's going to be pumping? That's a huge difference, So I've seen other YouTubers as well, like when a project basically project corrects it. I said the same for Disco, for example, here. The market. I mean, this thing did a 33x, right? 33x. It pumped from 90K to 33.37, so 33x, right? So obviously it needs to have a correction, but now it's basically going sideways for a week now. But when it was correcting from here after 33x gain, some YouTubers say, oh, it dumping, I'm not sure, I better be cautious, better sell and go. Like, what the fuck, dude? Even now, like, oh, I'm not sure, and then now they're not sure, and when he's gonna pump back to 3 million market cap, oh, buy when it's good, this is gonna be the next Landwolf and next Andy. It's just like YouTubers are fucking retards as well. They just when something dumps, they're like, oh, they're same like viewers. Like when something dumps, they're like, oh, scared, oh my god, this is gonna dump even more. And then when it pumps, and they say, oh, buy more, like on shitcoin now, like it's up 50%, and now everybody's foaming it now. Buy, going crazy. You should have both here, motherfuckers. You know what I mean? So that's the thing. Also, with Disco, it's up, up to 5-10 million market cap. Now is the time to load up. Same on trash coin. This is only up 1%. Now is the time to buy, not when it's going to be up at 15 million market cap. And it was already at 15 million market cap. So that's the difference. You need to buy when it's down, not when it's the FOMO kicks in and everyone's like, oh, bro, I have to buy this because I'm going to miss out. So that's the difference. Between Moonboys and people who actually believe in something, you know what I mean? In your opinion, BTC holding okay? Do you see a mini run for Christmas money? I mean, Bitcoin is not looking okay at all. I mean, look, overall, like we are still, only like what, 15% down from all-time high, but I don't like this manipulation from Powell and Trump and all this. Like, it's very fucking annoying, So it's still okay. I mean, we are still, you know what I mean? Like, we are still, not below 100K, but like this we wanted to even the past few days, we need to break above this high, because we had the liquidation here, it recovered here, and then every time, and then after it was just going down, we had this line. We broke out, which was bullish. We went up, pump, and dump again, and it was started to go up. And I said, we need to break above this line here, 116, 17K, stay above for 2-3 days, and then basically the confirmation is going to be there, and then all the people who hold stable coins, they're going to swap back the stable coins to Solana and Ethereum and start playing in trenches, like invest in high risk coins. But this is not what we want. This is dumping. Look, $110,500. So this is not what we want to see. You know what I mean? Like, it's just very annoying. Like, it's like, how many times they're gonna come up more and say, like, they cut the interest rate and it's fucking dumping, bro. There is no logic, man. Yes, some people might have expected to cut 50 basis points instead of 25, but still they fucking decreased the interest rate. You know what I mean? Like, it just doesn't make any sense. Like, this market is retarded completely. Like, it's crazy. Hello, CJ. How are you? What do you think about Giga Chat? It's cooked. Like, it's last time I checked it, it was down to shit. So yeah. Guys, I don't have time now to pull up all the charts and everything because we watched too long the thing. 650 people watching. Like, holy smoke, guys. Drop a like on the stream would be highly appreciated. We have only 54 likes on YouTube. Only 54 likes on YouTube, and we have 650 people watching. Okay, 593 is from X, but even on X as well. Look at this. 593 people are watching from X, and I have only 16 likes and 8 retweets on 754 views. And 500 people watching currently. So, I mean, it's crazy. So just, drop a like, repost, to the stream so more people can see all the FOMC, what happened and all those things. And yeah, guys, I will be wrapping up the stream here. So guys, thanks so much for watching. Don't forget, Shitcoin is fucking flying, and I told you guys it's gonna send. So guys, thanks for watching. I have to go now. Been streaming for 1 hour and 7 minutes. 652 people watching the stream is amazing. So guys, thank you so much. Drop a like. Amazing stream. 650 people watching. Crazy new record. So guys, love you all. Take care and see you in the next one. Bye-bye.